Hey everyone, welcome back to my channel, and in this video where we will be discussing the top ways to fix your credit. Credit is an important aspect of our financial lives and plays a significant role in our ability to make purchases, apply for loans, and even get approved for rental agreements. In the United States, credit is a crucial element of personal finance. But unfortunately, many Americans struggle with poor credit scores. According to recent studies, 34% of Americans have subprime credit scores, and 20% of Americans have no credit history at all. This means that a significant portion of the population is unable to access the credit they need, which can limit their financial options and opportunities. If you plan on buying a home in the near future, it is vital to focus on improving your credit as much as possible now that it is literally the difference between saving thousands and thousands of dollars in interest every month. So, tip number 1, understand your credit score. The first step to fixing your credit is understanding your credit score. The credit score is a numerical representation of your credit worthiness. Based on your credit history, it lets the lender know how likely you are to pay them back for the money they let you borrow. A credit score ranges from 300 to 850. And the higher your score, the more likely you are to be approved for loans and credit cards. In the United States, the average credit is about 698. It's essential to understand what factors impact your credit score, such as your payment history, credit utilization, and the length of credit history. By knowing this information, it can help you take the steps towards improving your credit score. Tip number 2, check your credit report. Guys, the second step to fixing your credit is to check your credit report regularly. Your credit report contains information about your credit history, such as your payment history, outstanding debts, and credit inquiries. By checking your credit report, you can ensure that the information is accurate, up to date, and there won't be anything that you're not aware of so that you can go ahead and correct it if necessary. In the United States, it's estimated that 1 in 5 credit reports contain errors, which can negatively impact your credit score. That's pretty significant, but it can be avoided by being on top of your credit regularly. By checking your credit report regularly, you can identify errors, take steps towards correcting them as soon as possible. Step number 3, make payments on time. The third step to fixing your credit is to make payments on time. Probably the most common one that everyone should know, but not everyone necessarily follows, right? Your payment history is one of the most significant factors that impacts your credit score. Late payments can have a significant impact on your credit score, so it's essential to make payments on time. In the United States, 35% of Americans have missed a payment on their credit card or loan in the past year. By making payments on time, you can demonstrate to the lenders that you are a responsible borrower and improve your credit score every single month. Tip number 4, reduce your credit utilization. Guys, this is also very important. Credit utilization refers to the amount of credit you're using compared to the amount of credit available to you. Ideally, you want to keep your credit utilization below 30%. In the United States, the average credit card utilization rate is 30%, which means that many Americans are using too much credit. By using your credit utilization, you can improve your credit score and demonstrate to your lenders that you are a responsible borrower and not maxing out every single one of your credit lines. This is not only your credit, but also, for example, when applying for a mortgage. Most lenders want to see that your debt to income ratio, or also referred to as DTI, is right around 47%. And some are even lower. So it all depends on which lender you're talking to. So it is very important to keep your debt as low as possible. Tip number 5 is considering credit counseling. The final step to fixing your credit is to consider credit counseling. Credit counseling can help you develop a plan to pay off your debts and improve your credit score. In the United States, the average household has $8,398 in credit card debt. which can be challenging to manage. Credit counseling can help you develop a budget and repayment plan to pay off your debts and improve your credit score. But not just that, they will also assist you in removing inquiries, late payments, and clean up your credit history overall, which can be a great investment when you think about the thousands and thousands of dollars that it will save you in the long run. So, to sum it up, fixing your credit is an essential part of personal finance, and by understanding your credit score, checking your credit report regularly, making payments on time, and reducing your credit utilization, you can improve your credit score and access the credit you need. Remember that improving your credit score takes time, so be patient and persistent in your efforts. Thank you guys for watching. If you enjoyed this content, please leave a like and consider subscribing for weekly content to help you stay informed. So thank you and see you on the next video.